Imagine having a fortune so vast it eclipses legendary figures like Steven Spielberg or George Lucas. That was the reality for Anil Ambani in 2008. He stood as the sixth richest person on the planet, his fortune a staggering $42 billion. This was not just inherited wealth, it was a symbol of his own ambition and drive in the burgeoning Indian economy. He was the younger, more flamboyant son of the legendary industrialist Dhirubhai Ambani, the founder of Reliance Industries. The story of the Ambani fortune begins not in a boardroom but with a young man from a small village in Gujarat. Dhirubhai Ambani, Anil's father, was a man of humble origins but possessed an almost supernatural business acumen. He started his career as a clerk in Aden, Yemen, learning the intricacies of trade and finance. Returning to India in the late 1950s, he began a small yarn trading business in Mumbai's crowded markets. He founded Reliance Industries in 1966, initially as a textile company. He pioneered the concept of backward integration, a strategy where a company controls its own supply chain. This relentless drive for self-sufficiency gave Reliance an unparalleled competitive edge. After Dhirubhai Ambani's death in 2002, a fragile truce held between his two sons. Mukesh became the chairman and managing director, while Anil was appointed vice chairman. However, beneath this veneer of unity, deep-seated differences in personality, vision, and management style began to surface. The simmering tensions grew, leading to boardroom battles and public accusations that played out in the media. The feud became a national spectacle. The conflict grew so intense that it required the intervention of their mother, Kokilaben Ambani. In 2005, the family announced a formal split. The vast Reliance empire was carved into two, a division designed to give each brother his own domain to command. In the years immediately following the demerger, Anil Ambani, with his charismatic and media-savvy persona, seemed to be winning the race. A stark contrast to his more reclusive brother, he was the face of a new ambitious India. His companies, under the ADAG umbrella, embarked on a breathtaking spree of expansion, diversifying aggressively into financial services, entertainment, and infrastructure, creating a sprawling empire almost overnight. His flagship, Reliance Communications, became a dominant player in India's booming telecom sector. Capitalizing on the nation's mobile revolution, it aggressively acquired subscribers through revolutionary low-cost plans. This strategy made it one of the country's largest mobile operators, but also sowed the seeds of a high-volume, low-margin business model heavily reliant on debt. The market loved his ambition. Investors flocked to his companies and valuations soared, catapulting Anil into the ranks of the world's wealthiest individuals. Riding this wave of optimism, he launched his most audacious venture yet in 2008. The initial public offering for Reliance Power, marketed as a historic opportunity to invest in India's future. The response was phenomenal. The IPO was oversubscribed 73 times, raising a record-breaking sum in just 60 seconds. It was a testament to the immense public faith in his promise to solve India's chronic energy shortages. At this moment, Anil Ambani stood at the zenith of his power and influence, seemingly unstoppable. The very strategy that fueled Anil Ambani's spectacular rise, aggressive, debt-funded expansion, soon began to reveal its inherent dangers. His companies had borrowed enormous sums to finance ambitious projects across power, infrastructure, and entertainment. This high-risk approach, once a testament to his ambition, was becoming his Achilles heel. A colossal gamble that required a perfect economic climate. Then, the global financial crisis of 2008 struck, a catalyst that exposed the fragility of his over-leveraged empire. The international credit markets that had funded his expansion froze solid. Refinancing existing loans became nearly impossible, and interest rates skyrocketed, tightening the financial noose around his conglomerate. As a result, investor sentiment turned sour. The market's confidence evaporated, and the sky-high stock valuations of his companies, the foundation of his paper wealth, began to plummet. This rapid erosion of value crippled his ability to raise fresh capital through equity, a critical lifeline now severed. Nowhere was the pressure more intense than in telecommunications. The market descended into a brutal price war. Compounding this, Reliance Communications was losing the technology race. Its investment in outdated CDMA technology proved a costly misstep, as the industry shifted towards GSM, leaving Arcom perpetually playing catch-up. It became a vicious cycle. The debt continued to mount, while revenues from these struggling ventures failed to materialize as projected. The empire was caught in a debt trap from which there seemed to be no escape. The most significant was the entry of his own brother, Mukesh Ambani, into the telecom sector. Back in 2016, Mukesh launched Reliance Jio with an audacious strategy, offering free voice calls and dirt-cheap fourth-generation data. Legal troubles compounded Anil's financial woes. His company became embroiled in the infamous 2G spectrum allocation scandal. A more immediate threat came from a legal battle with the Swedish telecom equipment maker, Ericsson. The Supreme Court of India took a stern view, ordering Anil to pay the dues or face jail time. In a surprising turn of events, it was his elder brother, Mukesh Ambani, who stepped in at the last minute to bail him out. The final act was bankruptcy. The divergent paths of Mukesh and Anil Ambani offer a powerful case study in business strategy and discipline. Mukesh's approach has always been characterized by patience, focus, and deep vertical integration. This strategy is capital-intensive and may not yield quick returns, but it builds resilient, highly profitable businesses. Anil, in contrast, pursued a strategy of rapid, diversified growth fueled by financial leverage. However, it lacked the deep operational foundation and resilience of Mukesh's model. Mukesh Ambani succeeded by maintaining a laser-like focus on a few core areas. Anil, by contrast, spread his resources and attention across too many ventures. He builds fortresses, not just facades, ensuring his businesses can withstand economic downturns. The dramatic rise and fall of Anil Ambani is more than a business headline. It's a powerful cautionary tale for modern capitalism. His precipitous plunge from being one of the world's richest men to declaring bankruptcy offers profound lessons for entrepreneurs and leaders everywhere. The first and most crucial lesson is about the responsible management of debt. While his brother Mukesh deleveraged, Anil embarked on a debt-fueled expansion, a high-stakes gamble that became an inescapable anchor. This was compounded by a failure to adapt to technological change. His flagship, Reliance Communications, couldn't pivot from older networks, and when Jio's 4G revolution arrived, it was swept away, a stark reminder that past success guarantees nothing. This highlights another truth. Sustainable value is built on operational excellence, not just financial wizardry. While a master dealmaker, his ventures often lacked meticulous execution. His story also cautions against hyper-diversification. Venturing into power, infrastructure, and entertainment spread his focus and capital too thin, teaching us it's better to do a few things exceptionally well than many things merely adequately. In conclusion, Anil Ambani's journey from a $42 billion fortune to bankruptcy is a modern-day business tragedy of hubris and downfall. It's a powerful reminder that ambition must be anchored by prudence, and vision must be supported by viability. His legacy serves as an enduring warning for generations of business leaders. In the final analysis, operational substance will always triumph over fleeting financial spectacle. Thank you for watching the video. Please subscribe the channel.